Hello dear friends. In this session, we want to utilize what has been discussed in previous sessions and delve into the topic of backtesting trading strategies. In fact, in this session, we aim to develop a strategy using indicators and test it in the past. Before we start the training, let's have a brief explanation about the basics of backtesting. Great. As you can see in the image, we will evaluate a strategy at the end of this session. This strategy has resulted in a 15% profit in 7 trades. Well, we will explain more about this backtest later on. Here is our equity curve during this backtest. 127% indicates a 27% profit. According to this curve, we have also had profits up to 27%, but some of the profit has been lost, and ultimately we have made a 15% profit. Great. In this session, we will teach backtesting step by step. Well, the initial sections of the code in this session are similar to previous sessions. Information is fetched and organized from the exchange. For example, here we select Ethereum cryptocurrency in a 1-hour time frame. We also choose the number of candles equivalent to 1 week, which is 7 times 24 candles of 1 hour. Finally, we store price data in a variable called prices. Now, let's assume our strategy is based on the moving average. For this purpose, we add 2 new columns to the prices data frame that calculate fast and slow moving averages. Fast and slow moving averages are calculated at 5 and 20 candles respectively. Here, in addition to the libraries used in previous sessions, we need to import methods and classes from the backtesting library. If this is your first time using this excellent library, you need to install it first. For this purpose, you should use this command to install the library. Well, since we have already installed this library, we don't need this command. Okay, here we import classes and other items from this library, and we will explain them step by step. Friends, don't worry about the complexity of this code. Well, to start, we need to define a new class that inherits from the strategy class. This new class can have any name. Here we have chosen the name myStrategy. The input to this class is the strategy class itself from the backtesting library. By doing this, the new class inherits the properties of the strategy class. If you are not familiar with the concepts of classes, attributes, and methods in Python, don't worry. The explanation is structured in a way that doesn't require prerequisites. Inside the class, we have 2 functions named init and next. Using self, we will directly access the properties and methods of the class. Friends, don't worry about the complex code. Let's first examine the next function. The art of the strategy is right here. In fact, the next method is responsible for checking conditions to open and close trading positions at each candle or bar. Actually, next iterates over each candle, something we do in reality as well. So, at the present time, we check whether the current conditions are suitable for buying or selling. Well, in the init method, we specify the necessary features for introducing this strategy. One of the most important tools of a strategy is the indicators involved in that strategy. If you remember, at the beginning of this session, we defined fast and slow moving averages. Now, to incorporate these indicators into our strategy, we need to use this method. Here, using self, we access the data being backtested. Let's see where the information is provided to this strategy. We will explain more later, but anyway, note that the prices data frame is passed to the strategy at the bottom of the code. Excellent. Now, by typing self.data, we will have access to the prices data frame and its columns such as fast moving average. Now, inside the init method, we define two functions whose task is to send the values of moving averages as output. Now, what are these two functions used for? Pay attention that this method is necessary to use this library. One of the capabilities of this library is the ability to add indicators to strategy classes, which is done with self.I. The input to self.I are the two functions we have defined that send the values of moving averages as output. In fact, here we construct these indicators and using self, we make them understood to the strategy class. In fact, we add two features, FSMA and SSMA, to the strategy class using self. Now, moving forward, especially in the next method, we will have access to these features. In other words, in init, the groundwork for the strategy is laid. Now let's move on to the next method. As you can see at the top of the code, we have imported the crossover tool like this. In fact, if the first input to crossover, which is the fast moving average, crosses above the second input, which is the slow moving average, crossover will return true. According to the figure, the blue line, which is the fast moving average, crosses above the orange line, which is the slow moving average, from bottom to top. Excellent. This is the signal for the strategy to open a long position or buy. In fact, with this crossover event at the beginning of the next candle, the strategy has opened a buying position. Actually, this strategy in its next method sets the condition for entering a buying position based on the crossover of fast and slow moving averages. The buying command is placed inside an if statement with self.buy. If the crossover is true, we will have a buy. Conversely, if the slow moving average crosses above the fast moving average from bottom to top, we initiate a sell position. Excellent. Now the strategy class is complete and we need to see how to use it. If you notice, we have also imported the backtest tool from the backtesting library and defined a new variable named BT. In this line of code, we passed the prices data frame and they created a strategy class as inputs. In addition to these, we also define the exchange fee as 0.0004 or 0.04%. Now, what does exclusive orders mean? If we set this variable to true, we will have only one open position in that unit. In fact, before opening a new position, the previous position must be closed. Now, what is margin? If the margin is equal to 1, it means the position is without leverage and our capital is fully involved in the trade. But if the margin is 0.25, it seems we have leverage 4 and we will trade with 4 times the capital. With this, if our desired cryptocurrency grows by 1%, we will make a 4% profit. By doing this, if the selected cryptocurrency grows by 1%, we will make a 4% profit. Of course, the commission will increase as well. Now, we have stored the backtesting engine in the variable bt. Now, if we type bt.run, the backtest will be executed. Also, we store the results of this backtest in the variable stats. Finally, we issue the plotting command like this. Now, we run it. Excellent. We see the results. Now, let's print stats as well. By printing this variable, we will see more details of the backtesting. Running it will display valuable results. We will see information such as the start and end dates of the strategy and how long the strategy was active. Most importantly, our profit level, which here is approximately 15%, meaning our $100 has become $115. Excellent. Profit versus holding this cryptocurrency in this direction during the active period of the strategy is an attractive parameter to compare with our final profit. That is, if we did nothing and simply held, we would have made a 4.5% profit, but with the strategy, we achieved a 15% profit. Our number of trades was 7, and the success rate of these 7 trades was about 28%, meaning roughly 1 out of 3 trades was profitable. Dear friends, one of the parameters that may even be more important than profit is the maximum drawdown parameter. We will address that next. Well, some might say this strategy is excellent, making a 15% profit in 7 days, and it should be applied everywhere. But no, don't rush, my friends. Let's increase the granularity by increasing the number of candles. Here, we will examine 1000 candles. Now we run the parts we have modified. Excellent. Now our duration is 41 days. Let's see the outcome. The result is disastrous. In 41 days, we have lost half of our capital and incurred over 50% losses. In fact, one of the most significant benefits of backtesting is facing reality. By doing this, you expose the flaws in your digital currency trading. Dear friends, you may have seen traders on social networks who only show their profitable trades. Please be smart. In fact, if we did nothing, we would have made a profit of 25% by simply holding this cryptocurrency. Now, should we be discouraged? Never. You must become strong in this field to build your own strategy and ensure it through backtesting. Now, let's see what the maximum drawdown is. Maximum drawdown is, in fact, the highest percentage decrease in capital during the backtest. Imagine in a certain period of the backtest, your capital drops less than 70% from the peak. This is a disaster, even if you ultimately make a profit. In fact, the drawdown at each point is calculated to see how much capital has decreased compared to the previous peak. Now, by calculating the drawdown at each point, we can find the maximum drawdown. Now, for further clarity, let's revisit the 7-day analysis. For this, we examine 7 multiplied by 24 hours. Now we run it. Excellent. Here the maximum drawdown is 17%. Meaning we have had a 17% decrease in capital relative to our previous peak. Although, ultimately we made a profit of 15%. In fact, for a 15% profit, we have exposed our capital to a 17% risk relative to the peak. Imagine if an investor handed over their capital exactly from the peak and incurred a loss. Please note that risk management and capital management are heavily dependent on the maximum drawdown parameter. And don't just be happy with the final profit. Excellent. In this session, we have provided a basic understanding of using the backtesting library. Now, imagine we can get better results by using better parameters instead of the numbers 5 and 20 for the lengths of fast and slow moving averages. Excellent. Now we have a powerful tool. To be our own analysts. Dear friends, please announce your requests for analyzing your desired strategies in the comments and in the Q&A section. Thank you for your attention.